risk management and insurance, protecting your business and family. Welcome to IO Insolvency Options with Darren Vardy, the Managing Director of Insolvency Options and a registered liquidator with over 30 years of experience helping businesses and individuals navigate financial challenges. In today's episode, Darren explores the critical role of insurance in protecting your business and personal assets. He reveals why proper insurance coverage is your first line of defense against business failure and explains the types of insurance that business owners often overlook until it's too late. You'll learn about personal guarantees, director liability insurance, key person insurance, and strategies for protecting your family when business challenges arise. I'm your co-host Anthony Pearl. Let's dive into unlocking more about insolvency options. Darren, let's talk a little bit about risk management and particularly around insurance. Insurance is an important part of any business, but how prepared are people? How much understanding do they have about what they're actually doing and why they're actually doing it?
Look, insurance is now becoming a really big place within the Australian business community. My philosophy on insurance is that I'm an insolvency practitioner. I have a particular expertise in that field. Business owners, in my view, should seek out an insurance broker to get the right advice on what insurances they need in place to cover them for their particular business. A lot of businesses will just go out and get a standard business cover. They'll go out and get some workers' compensation insurance, which they need for their staff. But depending on the type of business, some businesses might find that they're in the business of providing advice unknowingly, for which they may require some form of professional indemnity cover. And in circumstances where they've provided said advice and an issue arises, they may not have any insurance cover which will cover any problems that may arise from that advice being given. And I'm not talking sort of professional advice like accountants, lawyers, and the like. I'm talking advice, in the construction industry, design. If builders are doing a design and construct, now they may have all the insurances in place for the construct, but have they got the appropriate insurances in place for the design component, which is very different from the construction component. But this is why it's important to really seek the advice of experts, like, i.e. an insurance broker, to really have a look at, drill down onto the different components of your business and determine what the insurance policies are that you require in place to ensure that your business is covered.
There's definitely a great lesson there from the starting point is finding someone that is actually going to drill down and look and understand what truly needs to be covered. And you have to weigh that up, of course, as there's an enormous cost to insurance as well. And I suppose that's where a lot of people sort of turn a blind eye to it.
It does come down to cost, but it's, in my view, insurance is a necessary evil. We insure our house and its contents. Our business, generally business owners, provides for our house. So, we need to ensure that income. One thing that certainly business owners don't insure is themselves. And that's another thing that they need to concern themselves with, is that what happens if you as a business owner are unable to work for a period of more than 3 months? What happens if an accident happens? Are you covered? What are the contingencies in place in the event of what if?
And how often have you seen that businesses that you've been called in to work with don't have proper insurances in place?
A large majority, particularly the director or owner insurance on the director or owner of the business.
And what are the implications when that's not the case?
Well, the implications are that, if something unforeseen happened to the business owner, the business effectively stops in its tracks there and then. There's no one driving or generating the income, particularly when the businesses are small to medium-sized enterprises. There is debt owing by the business, which needs to get dealt with. And some of that debt, the director may have given personal guarantees. So then that will then flow back on the family unit and the wealth of the family unit that may or may not exist at that point in time. Whilst a partner, husband, wife, is dealing with the loss of their significant other, they've then got to deal with all the issues of these business related issues that they may or may not have had any involvement with in the past. So whilst they're looking to times of grief, they're then being forced to deal with what can be some real financial issues that could have been avoided with an insurance policy being in place.
We talked earlier about insurance for the business in terms of if they make a mistake in advice that they're giving or something goes south in a project. How much insurance is the right amount to get in place for these things? How often do you find that people may not have even considered something like that at all? And what are the implications then if they don't have something in place versus what happens if they do have it in place?
I guess how much is, how long is a piece of string? It all depends on the individual and what they would like to cover in the event of an incident. Most business owners are aware of their personal exposure within the business and the liabilities. So, they might take out sufficient cover to enable all their liabilities to be satisfied in the event of an issue. Those liabilities may be, business loans, lease obligations and the like. So there may be an assessment of, well, if everything stopped today and everything was sold and we're left with a pool of money, but also a bag of liabilities, if there's going to be an expected deficiency between the pool of money and the bag of liabilities, we might make the value of the cover to be the extent to which those liabilities are covered. And that's just a typical example.
And I guess that's the question as well, is that how often do you see that people, that find themselves in trouble in a business, which is going to send them towards, could be liquidation, receivership, bankruptcy, any of those options that might appear, and yet there is nothing there to protect them?
The majority of the business, as I said, the majority of the small businesses, again, because insurance comes at a cost, they tend not to take on such an insurance policy. This insurance policy is to cover them personally in respect of an accident. It's not to cover any liabilities for one of trading whilst insolvent or anything like that. It's really coming back to that personal cover in the event of terminal illness or death, and making sure that the business is wound down and the business liabilities are covered to ensure that there's no flow back on the personal side of the personal wealth with the spouse and the like. So
Yeah, I mean, it's a very difficult area, isn't it, for small business because, again, you're trying to operate in a space where often profits are not huge, particularly starting out. And then there's the sense of, well, I've been in business for a while. I haven't needed it this long. Do I need it now? And so insurance tends to get put to the back of things.
I think traditionally people don't want to think about worst case scenarios. And it gets back to risk management. When people go in starting a business, they never think about the fact that they're going to become insolvent. But there are measures to put in place to ensure that you don't become insolvent. No one likes to think about death or terminal illness, but it happens. And I think more and more now, there's certainly more cases of cancer happening every year. We hear, that I think they say, 1 in 3 are touched by cancer. So with things like that, in my view, these little insurance policies, whilst they come at a cost, do provide a real benefit when faced with a health event such as that, and just takes the pressure off, enabling the business to get dealt with and wound down, say, in an orderly manner without having that significant detrimental impact back on the family unit.
You mentioned something that I think is really important is when people are starting a business and whether they're starting it from fresh or whether they're buying into a business. And even at any point, if you haven't done this for a while, the risk management and understanding what should be included in that, I think is a huge thing. And people don't necessarily think about, well, I need to have a risk management strategy in case I do go insolvent, because people don't want to think that that is ever a possibility.
Yeah, look, denial is a wonderful thing, but I think stuff happens. And I think that when you're planning, it's all about planning for the best and the worst. And it doesn't take too much to plan for the worst and put some things in place in the event that it happens. But I can assure you that the benefits of having things in place far outweigh the detriment of not having things in place.
I always like to go back to some sporting analogies with this kind of stuff because if you look at a football game, for example, they put some reserves on the bench just in case things go south with a player. Whatever might happen, it could be an injury, it could be just exhaustion, any number of different things that can happen. There has to be someone on the bench that can fill in and do that. And yet we don't think of those simple scenarios as far as a business is concerned.
And with small business and small business owners, there may be no one on the bench that can fill in. But what's sitting beside the bench is an insurance policy which will cover for the financial issues that may arise in the event of something.
I think the important thing here as well is to make sure if you do take the insurance out, that the right people are informed that that policy exists
Correct.
so that it can be enacted in the event that something does happen.
Correct. And, that's where it does get back to the family unit and, everyone within that family unit knowing who they need to go to in the event that that happens.
Yeah, I mean, that's part of the risk management strategy, isn't it? That you're managing that situation in just in case, because you never know when something like that can happen.
That's right.
Tell me some of the other things that you think could be better served by someone having a risk management strategy in place that's, in the event that things do go south in the business. Are there some particular items and ideas that people should be thinking of in advance?
Risk management really needs to be assessed based upon the type of business. There is no one size fits all. The fact that the business thinks it needs or is aware that it needs a risk management strategy is the start. There are a lot of different professional organizations out there where a business can go to get the advice as to what they need to for their business put in place by way of risk management strategies. And depending on the industry, a lot of industry associations will actually provide some really good generic risk management policy documentation for a business to actually start going through and working through. But as I said, insurance and planning for the worst is, in my view, key when it comes to that risk management piece. And so, business owners, no matter how big the business is, obviously, the bigger the business, the larger the risk management policy needs to be. And you may well have reserves on the bench to be able to bring people in to fulfill certain roles, to assist with certain divisions and the like. But as a small operator, the risk management plan may simply be that I run a business. It's a business which is my personal, professional dealings. So therefore, all the goodwill is me. And your risk management strategy might simply be an insurance policy that sits there. And that's it.
It's such an important lesson for people to think about it in that way. And I imagine that you've seen the good and bad stories as far as that's concerned, where, on one hand, obviously dealing with something that could be tragic, but having the insurance there is a massive relief. And on the other hand, oh my God, what do we do? Because there's nothing there.
I had a small builder one year. Unfortunately, he passed away whilst on holidays overseas. Insurance policy was in place for his family. His family then appointed me to wind up the company on their behalf. The beauty about that was that there were sufficient funds. He had a debit director loan account. There were sufficient funds coming in from the insurance policy to repay that loan account, which enabled me to then go and deal with the company's creditors. And then the family spouse and the family were left with the balance of the insurance policy to do what they needed to do and get on with working out what life was going to be like without the head of the family being around. Whereas if there was no insurance policy in that instance, whilst there was equity in the house, we would have been left with a position where he was a co-owner of the house. We would have need to have potentially have to have the house sold and then the proceeds to come in to repay that director loan. which would have left the family unit in a far worse financial position and potentially out of the home that they lived in for the past 20 so years.
Yeah, I mean, it must be, an interesting and difficult situation for you when you're coming in those sort of scenarios, and there are some boxes you desperately want to make sure that have been ticked when you're going into it, because it's going to make your life a whole lot easier, and definitely that of the people that are coming to you.
And more importantly, that of the people coming to us. Because at the end of the day, we're just here to do a process and we have to follow the process through to the end. And in circumstances like that, it could have been a whole lot worse.
And that's all we have time for in this episode. But next time on IO Insolvency Options, Darren will look at director penalty notices, understanding your personal liability. He'll reveal the critical 21-day deadline that could make you personally liable for company tax debts, and explain the 3 actions you must consider when you receive a DPN. It's essential knowledge for every company director. For details on how to get in touch with Darren and his team on insolvency challenges, please consult the show notes. This podcast is produced by my team at podcastdoneforyou.com.au, helping professionals share their expertise through powerful podcast content. If you found value in today's episode, please like, comment, share, and subscribe to IO Insolvency Options so you never miss an episode. Until next time, remember, there's always a way forward when you know your options.